Joining me now for a look at the equity scene is Brendan Capstick from Nedbank Private Wealth. Brendan, thanks so much for your time this afternoon. So trade pretty choppy today. Stocks in the red in Europe, mixed here at home and in Asia. Anything to be concerned about, or are we just starting to see, some profit taking coming through?
Yeah, good afternoon. Thanks for having me. Yeah, I agree with you. I think it's probably markets taking a breath after Monday's strong rally and also a bit of a follow-through rally yesterday. We saw, of course, the pause and the positive trade talk between the US and China over the weekend, and subsequently we had this strong recovery on Monday. And just in saying that, yesterday we saw President Trump in Saudi Arabia on a deal-making trip, and there's around $600 billion possible commitments to U.S. companies. And a big benefactor would be the likes of NVIDIA, and that was up strongly yesterday, around 6%, as well as President Trump announcing that they will be allowed to start exporting some of these sophisticated chips to the likes of the Middle East. But in saying that, I think it's a bit of a profit-taking day, as you mentioned, just digesting these tariff announcements.
Sticking with news that were out yesterday, inflation figures out from the US also being released, CPI easing to 2.3% in April, and that from 2.4% in March. Calming investors as well. Are you surprised by the data, considering that we also had, the Liberation Day tariffs come through that month? Is it too soon to tell when it comes to the impact of inflation? Are we just, playing a wait-and-see game now?
Yeah, 100%. I think it's for the month of April and came in lower at 2.3%. So the market was positive on that news as well. But in saying that, have we really seen the effects of these trade tariff talks and the disruption to certain supply chains as companies have started shifting things around? And also in saying this, we've seen this V-shaped recovery out of the equity market in the US. We don't really know what tariffs will look like after 90 days. Yes, we've got a baseline 10% that we've seen through the UK. But even in saying that, the 10% was never there. And we've seen this recovery out of SA or S&P 500 now trading above 20 P multiple. So markets are not cheap anymore. So that is really a backward-looking number, unfortunately. So I think people are becoming more cautious on what the effects of inflation will be going forward in the US.
And sticking with that inflation print, we saw that the softer inflation number weighing on the dollar, which in turn boosted the rand, Brendan. And it's also been interesting to see how the rand has been holding its fort, even with the return of stage 2 load shedding. What have you made of the currency's resilience?
Yeah, spot on. I think it's been resilient, trading in that range about 1820 to 1830. There has been bouts of strength. There's a couple of things to say for that. Yes, the dollar has been weak, but there's been renewed confidence in the dollar after the trade talks over the weekend. The persistent debt levels in the US is an overhang on the US dollar longer term, I think. I think locally we have seen some appetite coming into our markets. Net buyers of SA equity yesterday, first time in a long time. So there's renewed confidence, I think, in certain areas of our market, and as well as that gold trade. I think we've seen that gold come off, but international buyers still have an appetite for our gold shares. So possible things to consider, and as well a bond market holding up. So I think there's some factors to consider when you look at the rand around 1820 odd.
All right, let's move over to some company news. Burberry posting declines in sales and profit, but numbers beat estimates. This, of course, comes in the midst of a turnaround strategy in that company. What have you made of the group's cost-cutting measures? I think today they also announced a move to cut jobs.
Yeah, I saw that. We don't follow the numbers too closely, but follow the sector. As a whole, the sector has had a tough run, I think, on a year-to-date basis. It's been a winners and losers scenario where the likes of Hermes has been a winner, and unfortunately LVMH has been a loser. But I think what we've seen in that space is really the strain to the Chinese consumer, really taking strain on some of these names. But yeah, I think that luxury brand space in the last week has had a bit of a bounce. We saw Richemont up around 5% earlier this week on the Chinese positivity, possibly, as we see their GDP figure back at 5% forecasted. So hopefully it comes through for Burberry, but not close enough to the company to have an informed view on it.
And sticking with China, numbers out from Tencent today, and that gaming unit really giving the company a boost, the group delivering top line and bottom line growth. Those numbers really filtering through to Naspers and Prosus today. The last time I checked, both share prices were above 2.5%. A strong performance from that counter, right?
Yeah, positive news for SA investors. I think all of us have direct or indirect exposure into those two names, Naspers and Prosus, of course. And, Tencent results, really good one again. We saw JD Group as well with strong sales numbers yesterday. And even in saying that, Tencent spending money on their food delivery businesses. So they're spending capex. That share price has been resilient, up 25% this year so far. And surprisingly, the Naspers Prosus share prices are still trading at a discount to some of the parts of north of 40%. So the good performance in Tencent is really widening that discount. Both of the shares, Naspers and Prosus, also up around 20% and 25% respectively year to date. So they've done really well for investors. In saying that, Naspers Prosus have been buying back shares in the market on a regular basis. So, really solid set of results on Tencent, and just highlighting the strength of that Chinese consumer going forward as well. So, really good set of results on Tencent, and positive for Naspers and Prosus shareholders.
And moving over to the property sector, we've been getting a ton of results out from the sector today. Numbers out from Dibula. They've reported a 4.2% rise in interim distributable earnings. It's interesting to see that they're starting to see a recovery in that office property market.
Yeah, 100%. I looked at it briefly. It's a little bit small. It's under 5 billion market cap in our space. But just talking about the sector as a whole, and really probably leading into my stock pick as well, as we saw Redefine earlier this week, looking really good on positive reversions, the first time in 3 years. So that is definitely green areas or green shoots developing in that space as a whole. Of course, there's headwinds on office still, but I think the retail environment, in industrial environment, the uptick is definitely positive on a look-through basis.
All right, let's hit pause on the conversation. Before we move on to your pick, let's take a moment to touch on some counters that have been attracting interest from your industry peers.
I'm picking a stock listed in the US. It's a semiconductor equipment manufacturer, Lam Research. LRCX is the share code, and they make all kinds of very complicated machines that are involved in the process of making computer chips. So everything to increase the yield of the wafers. And the wafers is that piece of silicon, looks like a pizza. Then they go to a microscopic level and they create these microchips. And Lam Research has got a bunch of different machines involved at different points of these very, very complicated processes. We saw a decrease in the tensions between China and the US in terms of tariffs. That's good for semiconductor manufacturing and the equipment makers. And there are further movements where the US might loosen some of the export restrictions. And I think all of this is very good for semiconductor equipment manufacturers like Lam Research. And I do believe that with the shares having been under pressure the last few months, the longer term trend is we're going to have more electronics that's going to need more microchips. They're going to become smaller and more powerful. That needs more intricate machines to create them. And that's good news for Lam Research.
I want an Uber to take me to my portfolio. No, so I still think there's a great opportunity there. And it's one of the cheapest large platform tech companies out there. And I think the opportunity has come because people are concerned about Waymo, which is the ride sharing, the robo-taxi thing of Google and their partners. But I think, having looked at it, I think it's more likely they do a partnership than they become a competitive threat. And even there's a likelihood of a Tesla partnership. It's still early days, but that uncertainty is, I think, what's created the opportunity. And if those fears play out less badly than some people have expected, I think there's a massive opportunity for growth. It really is a large and growing platform, strong cash flows, margins are opening up, and the potential for further growth is significant. So I like it, I continue to like it, and that's my call, Uber.
So Grant, going with Uber and JP picking Lam Research. Your analysis on those counters, Brendan?
Yeah, let me talk about Uber first. I do like the company. I think a really innovative, disruptive company, and those are the ones you want to invest in longer term. So, of course, we all know the platform, really dynamic platform evolving constantly, food delivery, very small parcel delivery, and of course the ride-sharing element of it. So I like Uber, it plays in that whole Lyft, Waymo space, and I think to Grant's point, there will be synergies between it, but I think the platform wins, and I think that's what we've seen with a lot of these big tech companies. The larger platforms are the one that you want to really stick to. 28 times 4P, so it's not cheap, up 52% year to date to share, and you're investing alongside the big names such as Bill Ackman, which took a stake in the earlier this year. So do like it, not cheap, in quality long term.
All right.
Just on the Lam research.
Yes.
Yeah, I'll maybe just have a brief comment on that. Of course, JP mentioned Lam research. Definitely that space is really exciting with the AI chips. As I mentioned, we saw the tech companies report 2 weeks ago. None of them cut spending on their chip spend. So I think that's really intact for the likes of NVIDIA, AMD, Broadcom, and Lam Research. That would be the factors of this. As well as we saw yesterday with that rule being removed to export these high sophisticated chips to other parts of the world. So definitely good name to look at. 23 times 4P, so not cheap in tech terms. But yeah, I do like the name as well. We don't hold any of the shares, but both quality.
All right, so you like both of those counters, but that not being your stock pick, you did mention that you'll be picking something in the property sector. Is it redefined?
No. On a look-through basis, my stock pick is Foschini Group, TFG.
Oh.
listed. Yeah, so, I was just trying to set the tone for the look-through. So we see it's redefined, positive update. And that really filters into footfall and the retail space. We've seen the VAT increase being scrapped, that 50 point increase being scrapped. The retail shares have pulled back quite a bit. I mean, the Foschini Group's down around 19% year to date. It's trading on a 4P of around 13. So, and also we see interest rate cuts going forward, most likely in the next couple of months, as well as GDP growth being forecast between 1.3 to 1.6%. Just think back in 2024, we only had 0.5% GDP growth. So in that sense, there's better consumer confidence. There is liquidity through the two-pot system. So as a look-through, we're already seeing these areas through the property sector and i.e. the retail space. So I think you can buy Foschini Group here at this price.
Brendan, let's leave it there. Thanks so much for your time and sharing your analysis of trade at midday. That was Brendan Capstick from Nedbank Private Wealth.